Hi everyone, welcome to our Empower Rangers Forex weekly Forex Tactics review for the week commencing 19th of May 2014. So let me share with you my screen. Hang on for a second. Okay, here we go. So we are having a very quiet week actually. You can see that the US majors continuously trading in a very tight range, although we did have some interesting news from the euro dollar. That being said, well, the market was quite quiet from Wednesday to Friday onwards. Probably, well, maybe because of the options expiration week, maybe a lot of people are away, so a lot actually may be around. So then, in any case, let's see what's happening. So I'm going to flash you the four-part disclaimer. I'll remain silent. Okay, so if you're watching this, please pause. Understand that what we are doing here is to give you share with you our insight and what we think the forex market is going to do. We are not giving any form of investment advice. So each week we are looking at the FX fundamentals, identifying the strongest currency to buy and weakest currency to sell. Take a preview of the red flag events for upcoming week. Examining the futures traded position, but this week unfortunately I do not get the update, so I have to skip it for this week. Then fourthly, we look at the FX technicals via our currency chart matrix. No channel breakout ideas this week again because the market is very quiet. So it's just the market condition that doesn't give us things that we want. So we move on to lastly the swing trading ideas. And for FX fundamentals, we have started at a very interesting week because first of all, in terms of China, we have the industrial production and retail sales. As you can see, the industrial production actually rose by 8.7%. Unfortunately, this is below the market expectation, and it's a sign of the slow and uneven recovery in Chinese economy. Okay, so that is the piece of news from China. From Australia, we have got the NAB business confidence and the budget, annual budget. So NAB business confidence actually was up to 6, a reading of 6, which is better than last month March reading of 4. Okay, so that is an improvement of the outlook of the Australian economy, business confidence number. Then we move on to the Australian budget. Well, what happened was that it is an austerity budget. Okay, what it means is number one, there is a reduction in the labor force, the civil servants labor force by 16,000. At the same time, the Australian government decided to impose additional tax on the rich people who earn more than $180,000. There will be an additional 2% tax rate to be imposed. So this is what we call austerity budget. So once again, the market said that, well, this is just a tight fiscal policy, and RBA is unlikely to do anything to cut interest rate, nor is it prepared to raise interest rate in the near future. So what we are looking at is a possible slowly climbing up of Aussie dollars, basically because investors continue looking for yield. It happens that Aussie dollar is a very interesting high yield currency to look at, and you can see you can also go back to a few weeks ago where we have already started saying that Aussie dollar is looking strong. So that's the outlook of Aussie dollars. For New Zealand, we have the budget. We also have the RBNZ's financial stability report, retail sales, Graham Wheeler speech on Wednesday morning. And we'll just look at what RBNZ has said in the financial stability report. Essentially, New Zealand continue raising the concern of the potential housing bubble. Essentially, the RBNZ continues saying that it is going to raise the mortgage lender rate so as to curb the housing bubble. So if you have been following me for a while, you remember that it's nothing new. Okay, there's the retails on the one. Sorry, this is Now, yeah, this is New Zealand quarter sales. This quarter 1 2014's number. The retail sales only rose 0.7% compared with the 1.4% in quarter 4 of 2013. So that simply means that RBNZ has a very good excuse not to raise interest rate in June. It seems that the market is now cooking a story that RBNZ is not going to do anything in June's meeting. When RBNZ decided to raise the interest rate in March's meeting, the market then thought that RBNZ may raise interest rate one more time in June, seeing that this bullishness sentiment is dropping, explaining why Kiwi is a bit weaker than what we saw in March. We move on to Eurozone. Euro has a few announcements. We have the German ZEW economic sentiment. We also have the German preliminary GDP number. And some of the orange events, which is CPI for Eurozone, as well as the flash GDP for Eurozone. These are orange events, and yet they have some impact in terms of the euro dollars. So first of all, look at the ZEW German survey. The reading fell to 33.1 in April, compared with the number in March, 43.2. So what happened is that the Germany economy continued to shine, and in fact, there is what we call a polarity between the German economy's performance compared with the rest of the Eurozone. And that just seems to tell me one thing, that Eurozone is still in trouble. It has not come out from the recession yet, which aligns with Draghi's statement. It is thinking that Eurozone is still not really doing well. Therefore, there will be easing in June coming up. So you look at the GDP number for Germany, it has actually doubled to 0.8%. Okay, this is the number for Germany. I've extracted data from elsewhere, and I found that for France, the GDP actually is 0. Okay, France is 0, Germany 0.8. Eurozone GDP is 0.2. Okay, so you can see the divergence amongst Germany, France, and the rest of the Eurozone. Okay, so the sharp difference between Germany's performance and the rest of the Eurozone served to highlight the structural changes in the region, where growth is unevenly divided and created a sense of urgency for further stimulus from the ECB. So essentially, this sums up pretty nicely why we think that euro-dollar can drop further in the month of June. ECB is going to do something about that. The Eurozone CPI's reading was only 0.7%. Okay, it's still way below the ECB's target of 2%. Okay, so I believe that ECB has very good excuse to do something in June. For England, we have got the claimant count, unemployment rate. Carney make a speech and inflation report also. Okay, so we start with the rate. It was 5-year low, 6.8%. Claimant count dropped 25,000. Take a closer look at that. We saw that the average wage gains actually rose 1.7% only, while the market was expecting 2.2. While if I were BOE and I have no plan to raise interest rate in the near future, I would choose to focus on the average wage gain and make a big fuss of it. I mean, 6.8% unemployment rate. You know what? The economy is still not doing very well. The numbers are not consistent. Blah 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 blah. Because why am I saying this is that Carney actually had no intention to raise interest rate, sort of like contrary to what the market has expected. And yes, the market thought that interest rate hike will happen in Q1 2015. Market thought that Carney may switch his tone by saying that it can come earlier. It seems that, well, BOE is very happy to have the interest rate hike only in Q1 2015. So be it. So the UK takes a very conservative approach. That's why UK dollar, British pound is a neutral dollar for the time being. Okay, it's a neutral dollar. For the United States, we have a series of data coming out. Of course, we have retail sales. Retail sales rose only 0.1% in April. Okay, core retail sales, however, dropped 0.1%. So retail sales rose 0.1, core core dropped 0.1%. What does it mean? The Fed said the numbers are not consistent. So why should I talk about raising interest rate now? Why should I commit to you guys that I will raise interest rate in 6 months' time? So Fed has a very good chance of remaining silent as to when the interest rate hike can happen. Okay, so that is what we saw in the retail sales. Inflation rate rose 0.3% in April. Core inflation rate rose 0.2%. So that gave the Fed a little bit panic mode because the inflation rate is up. So retail sales not so good. The CPI number is good, inconsistent. So Fed says it is inconsistent. Jobless claim dropped 24,000 to a 7-year low number to 297,000 for the week ended 10th May 2014. So the labor market is improving. Okay, and the Philip Fed manufacturing index, okay, it dropped to 15.4 in May. Last month's number was 16.6. So you know what? Partly supporting the view that U.S. economy still needs some support. Janet Yellen actually made a speech on Friday morning at 7 a.m. Singapore, Hong Kong, Malaysian time. Take a look at this. It seems that Yellen is still singing the same song. Well, you know what? The economy still needs a lot of help. We have yet to fully come out of the financial crisis. Okay? So by this, it means that Yellen has no urgency of talking about raising interest rate. Housing starts. Housing starts jumped 13.2%. Building permit rose 8%. Well, this is because of the low interest rate environment, and that actually give a boost to the housing sector. Consumer confidence. University of Michigan's consumer confidence number dropped to 81.8%, 81.8 in May, compared with April's number of 84.1. So there's some concern from the consumer side about the food and energy prices. So overall for US, the situation is the Fed is unlikely to raise interest rates soon. The Fed is non-committal as to when this interest rate hike can happen. So it's subject to everybody's guess. So if you take the view that Fed is unlikely going to raise interest rates soon, well, you can be the bearish camp for US dollars. That being said, the other very important point to look at is whether there will be some improvement in the US data from all sectors: manufacturing, labor, housing, and then CPI, retail sales. If all these numbers are going up nicely and consistently, then that may signal Fed will come to the point of telling us, well, interest rate hike will happen. Okay, so just keep in mind on this. Right now, the US data are not consistent. Finally, for Canada, we have only factory sales. Factory sales rose 0.4% in March. Okay, so that's all we have. So I've actually summarized all the fundamentals, and I will just mention one thing. I've changed the fundamental view on British pound from neutral / bullish to bullish. To neutral, because I don't see BOE is going to do something in the next few months. So short-term wise, British pound is a neutral currency. I've also changed the fundamental view of Kiwi dollars from a neutral / bullish to neutral as well. That is also partly reflecting the sentiment that RBN said may not be raising interest rate in June. Okay, so other things remain the same. So I'll let you read what we have got here, and meanwhile we move forward to red flag events for the upcoming week. I would say that next week is going to be a very, very interesting week because there will be Euro data coming out. These data are very important ones, so pay attention to that. But starting off, we have on Tuesday, Australia, we have the RBA minutes to the monetary policy. And I'm looking at RBA would say that the interest rate will be kept in the same. No indication that they will cut interest rate, nor would they say anything about interest rate hike. So it should be a neutral effect. And then we have China HSBC flash manufacturing PMI. Last month's number was finalized at 48.1. The market thought that it is going up in this time. So let's see whether it's 48. Expected number 48.4 will be valid. For Japan, we have the BOJ interest rate announcement that will be on Wednesday morning. So let's see what Kuroda is going to say about this. Then we have got the Eurozone. Eurozone, we have a couple of announcements coming up. First of all, the President Waldman for German funds will speak on Monday afternoon. When we have the Eurozone flash manufacturing PMI, French flash manufacturing PMI, German flash manufacturing PMI, all these are market mover. So towards the end of the week, Friday afternoon, we have the German IFO business climate. Okay, so there are quite a lot of key indicators from Eurozone next week. For the UK, we have the CPI. If the number is low, still like 1.6, 1.7%, BOE will be very steady and not panic mode. One will not be in panic mode of talking about raising interest rates. So that's quite important number to watch out. And we have got the minutes to the MPC meeting and UK retail sales, second estimate of Q1's GDP. Okay, so watch out the CPI number. To me, is pretty important indicator to see whether the BOE is going to keep the neutral tone on interest rate policy. For USA, we have the minutes to the FOMC meetings. Shouldn't be a big thing because the island has consistently telling us the same story, so I'm not so concerned with that. And then we have got the IJC number, weekly number, existing home sales and new home sales, so it should be a quiet week on US dollars. On Canada, we have got the retail sales and CPI. Now, a market actually expects a drop in the retail sales, core retail sales. So let's see whether this is true. And inflation rate is expected to be 0.2%. And if that's the case, why would BOC be in a hurry to raise interest rates? Okay, so that's all the things that we have for next week. In terms of the currency chart matrix, this is what we have got. As you can see on the right-hand side, only 7 boxes are highlighted, indicating that there was an intra-week peak move of 200. So it's a very quiet week. Somehow in this year's trading, you notice that our volatility has dropped tremendously. The market is very different from what I saw in the last 3-4 years. So we need to be very patient, okay, and watch for big fish to come. Currency chart matrix saw that the euro, dollar, pound are weakest currency to sell, and then CAD and yen are stronger currency to buy. Now, also take note that Aussie is when Aussie is not the strongest, but Aussie is still strong. Okay, so if you are looking at Aussie dollar instead of CAD or Kiwi, yes, you can still do this. On the other hand, you'll notice that we have got Swiss franc, which is considered the weakest as well. So euro, pound, Swissy are weak actually. Okay, so and we look at I will just go skip all this because they are not part of the report this week. I move on to the US dollars index. Now, in terms of the US dollars index, I saw that there was a spike during middle of the week, but then it dropped quite hard then. Now, what you see is that right now, US dollars is trading at a new range, new higher range. So which means that wait for the price action and see if the support the support or the resistance will be tested. So right now it is clearly a neutral area. It's neither here nor there. But looking at the previous trends, it is up. So the chances are that the trend will still be up. So I'm a little bit bullish in US dollars index from a technical trading perspective. The Nikkei 225, there was a little bit of the sell-off towards the end of the week, and yen, and that's why Japanese yen is strong. Now, the Nikkei 225 is going to test the support area again, and you can see that the index has been making continuously lower highs. So the triangular formation is there, waiting for this support to be broken. I'm looking at the price action here. I'm not going to say anything except that if you are very bullish in Japanese yen, be careful. Do not take a long-term view yet until you see a break of this chart. For S&P 500, right now it is in the trading range. We make an all-time high during Tuesday's session. Unfortunately, it gave back on session Wednesday and Thursday session. Friday there was a little bit bullish move because of the options expiration. So the market is not completely risk off yet. If it is, then Swiss shouldn't be weak but strong. Okay, so there's no channel breakout trade because you can see that there's actually nothing in the Forex market. So we move on to swing trading. We've said that we are going to short the pound yen cross and euro Aussie cross. Let's see what happened to them. For pound yen, yes, we got a swing high formation after Wednesday session. We went in on Thursday at 170.82. We came out on Friday at 170.65. So officially we registered 17 pips of profits. 17, yeah, it's still profit, right? What is even more interesting is that for Euro Aussie, I was waiting for this break. I was so happy. Unfortunately, on Thursday, it ended up bullish. Okay, never mind. Has not been stopped up yet. So on Friday, we went back to the downside, and as a result, we make 7 pips. Okay, so this week, 24 pips. It's something that, of course, our weekly Forex tactics review is unheard of. In the good old days, we talk about as 170 pips, 200 pips. Now we are talking about 7 pips, 17 pips. But that's the reason why we need to be patient. If the market gives us 17 or 7 pips of profit, do we take it? Of course we will. For the CAD Swissy pair or cross on the weekly chart, Swissy was weak. As a result, there was a breakout of this cross, but yet we have been stopped out. So we are still monitoring this cross. So new swing trading ideas for next week. Wow, this is a very difficult week to look for ideas. But after searching for all the daily charts, I found that potentially we can consider 2 things. Number 1, I want to do one more time pound yen cross short. Okay, but the ATR has been up. Now it's 104. So just be careful with that. But the chart is quite nice because there was a weekly triangular formation that has, I mean, the price action has come out from the weekly triangle. So yes, there is still a very good chance of the cross to go down. And for Euro CAD, this is not the best cross, but I cannot find any other cross to promote. So this is like, okay, this is the best of the not so desirable opportunity. So personally, pound yen is my first choice. Euro CAD is my second choice. Okay, so Euro CAD, the ATR is now 123 pips, 3 pips. Okay, so let's see how they do next week. So if you are going to look at the equity market, I welcome you to come to our options trading hangout. There's a new name for this. I used to call it Saturday Fever, but I'm going to change the names and register a new URL called optionstradinghangout.com. So it's going to be in a hangout format. So I look forward to your comments and support. And thanks for watching. If you have any questions, comments, observations, send me an email. Check out my other websites, membership site, and see what other offers I have for you. Okay, so that's all for this week. You'd also notice that I'm actually using a hangout format to do the Forex tactics review. I found that this is a lot more efficient and it's faster for the video to be uploaded to YouTube, and I can share this with you as fast as I can. Okay, so have a pleasant week. This is HM Wong. Trade well. Bye bye.